I'm Drew Stevenson. I'm a professor at South Texas College of Law in Houston, and this is the third in a three-part series of videos about Texas SB19, which is a new law that basically punishes banks if they boycott or divest from the gun industry. And this video in particular is going to talk about something called Operation Choke Point and some of the history and myths about Operation Choke Point, which was part of the legislative basis for enacting SB19 and similar proposals that have been brought up in other state legislatures. So because there seems to be, this doesn't go away, there seems to be so much misunderstanding about it, I thought I should cover this. If you want more information about the statute itself, SB19, and its companion statute, SB13, I have two other videos in this series that explain the statute and try to put it in the context of what other states are doing as well as federal regulators. But here, let's talk about Operation Choke Point. So the legislative history of Texas SB19, as I mentioned, focused on something called Operation Choke Point. A National Shooting Sports Foundation, that's the trade association for the gun industry, spokesman testified at the Texas state legislature that when Operation Choke Point ended in 2016, the same policies were privatized by banks, insurers, and tech companies. This is, for those familiar with Operation Choke Point, this is kind of laughable because Operation Choke Point was actually directed against banks, and there's no indication that the banks liked it or would have wanted to privatize it. And the bill's sponsor in the Texas legislature claimed that 75% of gun dealers in Texas had faced financial discrimination. Now, the gun dealers that they had testify were basically small business owners who own mom and pop gun shops and gun stores who, like many small business owners, they would go to banks and get turned away from some lenders when they wanted a commercial loan or line of credit. Now, most people attribute that if you have a restaurant or a nail salon, to just how hard it is for small business owners to get finance and establish lines of credit and so forth. But for the gun shops, they automatically assumed that they were being punished or targeted because people don't like guns or are trying to abolish the Second Amendment or something like that. To me, it sounds very paranoid. I simply don't believe that 75% of gun businesses had faced discrimination. I do believe that 75% of small businesses that are gun dealers and gun stores probably had to go to multiple lenders to find someone to extend them a line of credit or a commercial loan for their business, because all small businesses have to do that. So let's proceed and talk about what was Operation Choke Point. So during the Obama era, so we're going to go way back to, let's say, 2013, 2014, there was a little task force in the Department of Justice, and they were concerned about some criminal activities or consumer fraud activities that basically relied on the banking system to do to launder money or help run their Ponzi schemes and other things. So basically, a little task force was created. It's not clear that President Obama himself was involved in this at all or even knew about it, because the DOJ operates fairly independently from the White House, except in the Trump administration. But so whoever was involved with this pressured banks to stop dealing with commercial customers, and by that we mean borrowers, that posed something called reputational risks. And so this means that they're engaged in activities that can end up harming the reputation of everybody who is associated with them in business, and that in turn can hurt let's say, a bank's other customers and investors, and ultimately its solvency and so on. Now, this was mostly worrying about payday lenders and something called RALs, which basically make advance loans on tax returns or tax refunds. What happened, though, is the FDIC published some guidance documents, basically in a newsletter, in which they included a table of industries that they considered high risk. This included gun dealers. Now, the National Shooting Sports Foundation, the gun lobby, basically says that they did a lot to harm the industry. As far as I can tell, they didn't do anything to harm the industry, but it's a kind of a tenet of faith in the gun industry that Operation Choke Point was all about them, which it wasn't. And now the other thing, especially for lawyers and law students who may be watching this, to keep in mind is that there's more than one federal agency that regulates banks. So we have the Federal Reserve Board, we have the FDIC, which is a Deposit Insurance Corporation or Commission, and it was originally corporation, a quasi-governmental corporation, and now it's a mostly independent agency. We have the Office of the Comptroller of Currency, which is under the Department of Treasury, or the OCC, and then we have some newer entities that were designed to protect consumer finance. And so the DOJ people involved with Operation Choke Point had a few contacts at different regulatory agencies that regulate banks. And here's the table that the FDIC published just in a newsletter. So this wasn't a regulation, but they were just kind of making banks aware that they were concerned if the bank was lending to companies engaged in things. And you can see that some of these are pretty sketchy, right? Ponzi schemes, which are illegal, online gambling, racist materials, pyramid type sales, pornography, get rich quick products, and so forth, and escort services, drug paraphernalia. But they also include ammunition sales and firearms sales that they considered high risk. And this was from an investment strategy that there could be reputational risks. Now, reputational risks include some things like legal liability, right? So are they vulnerable to lawsuits? And also that they could be subject to various regulatory interventions or congressional investigations and things like that. And so if there's a big scandal, for example, with a particular company or an industry, like payday lenders, at some points people start asking, well, why are the big banks funding them and bankrolling them and lending them money and so forth? And so for better or worse, on this list, which was not binding on anyone, the FDIC included firearms manufacturers or sales, and ammo sales, with some other things that were sort of, as we can see, escort services and porn and Ponzi schemes and so forth. And this made the firearms industry very, very, very upset. So Operation Choke Point generated pretty quickly, by let's say 2015, 2016, congressional investigations, court challenges, so they litigated against it, an audit report by the Office of Inspector General. And by the way, the OIG report found that there was basically little or no involvement by the FDIC in the operation. But the mythology, especially in the gun industry, is that these federal regulators were all part of this elaborate, huge conspiracy that was Operation Choke Point. And it was actually a handful of people on a sort of initiative or task force at the Department of Justice who had contacts in these agencies. And so basically the FDIC, as far as the OIG could tell, really did nothing except publish that table that I put up a moment ago. And there may have been a couple of FDIC staff who had unfortunate conversations or kind of hardball conversations with banks on the phone or by email and so forth that were regrettable, but it doesn't seem like it was official coordinated action by the FDIC. Now, another agency that was involved but managed to skirt most of the publicity and negative congressional scrutiny and so forth was the OCC, the Comptroller of the Currency. agency. So the OCC also regulates certain types of banks and bank activities. And their concern and involvement with Operation Choke Point was from an anti-money laundering perspective. So remember, this kind of meant different things to different agencies. So for the FDIC, this was really about reputational risks and payday lenders, payday loan companies, and especially a certain type of payday loan company or payday loan product. For the OCC, this was about money laundering. And basically, the OCC was concerned that banks were lending to businesses, financing businesses, and then those businesses were helping launder money for organized crime and street gangs and terrorist organizations and so forth. And what the OCC was doing during this time was sending basically letters to bank executives requesting that they cut ties with certain industries, numerous that were pretty numerous. And this did include gun dealers, but a lot of it was people who held sell alcohol, liquor licensees, people who run have ATM machines, and so forth. And for those who are not familiar with how money laundering works, this is basically where you take the proceeds from illegal activity. So it could be terrorist funding or narcotic sales or some other type of, you're a bank robber or something like that. And you're trying to kind of cover your tracks. So you funnel the money through a legitimate business. And any business that handles a lot of cash or currency could be prone to this. If you're a fan of the TV shows Breaking Bad or Better Call Saul, there's a car wash and a nail salon that are used for laundering money because a lot of people pay for those in cash. And if things are paid, if a business handles a lot of cash, vending machine businesses, casinos have a lot of cash, bars have a lot of cash, and so forth, cash transactions, it's easy for them to kind of adjust the books and accounting to make it unclear where money is coming from, how much comes in and goes out, and so forth. And so it makes them very tempting for people who are wanting to launder money. And the same is true for businesses that take a lot of trade-ins on products, like a car dealership or a gun store, where you could take a used gun, trade it in, and put that trade-in value towards the purchase of a newer or bigger or better firearm. And so because gun stores are also a business that has a lot of cash transactions and a lot of trade-ins where there's some subjective judgments made in terms of the quality of the used firearm, the condition that it's in and what its resale value is going to be, how much of a markup value there will be when the gun store tries to resell it, and so forth, that basically a gun store would be a great way to launder money. And the OCC thought that, again, this wasn't for the gun stores. The Operation Choke Point was all about guns and trying to harass gun store owners. For the people who actually were hearing about OCC, which was the bank executives in the Obama years, this was actually about money laundering and applied to all the businesses that handle a lot of cash transactions or trade-ins. But the FDIC and the OCC were both involved in some ways in the reality and real world in Operation Choke Point. But a lot of what still circulates, I guess, in gun industry communications isn't really accurate. When Congress held hearings about this in the Obama years, several gun dealers testified before Congress that they were denied loans based on their industry. Again, the Office of the Inspector General put out a report that said they couldn't really substantiate these claims. Lots and lots of small business owners have trouble arranging lending. They have to go to several banks to find someone who will give them a line of credit or a commercial loan to buy equipment and so forth. Why? Because small businesses are very risky investments. A lot of them go into bankruptcy and default on their loans and so forth. But for the gun dealers, they were convinced that they were being persecuted, even though a nail salon or a restaurant or some other type of small business a hair salon may have had to go to just as many banks to find a loan. But for the gun dealers, they were convinced that it was some sort of big conspiracy to take away people's guns and so forth. And also, as I mentioned before, this was the abuses that actually occurred from the standpoint of the Inspector General's report were almost all related to something called refund anticipation loans. So some of the payday loan companies you could go in and show them your basically that you were owed your tax returns and that you were expecting a tax refund, and they would make a loan, loan you a portion of that, and at a high interest rate, which meant when your tax refund came in, you were going to have to basically give it all to the payday loan company. And so these are sort of considered predatory lending practices on people who are in desperate financial straits. So these things are similar to payday loans, but they're based on tax refunds that you haven't gotten yet, getting in advance from a payday loan company on your what you think your tax refund will be. And these were causing a lot of problems in the Obama years for consumers, and that seems to have been what really started Operation Choke Point, and where any type of abuses or harsh conversations or hardball from the FDIC at least centered around that. Now, this Obama-era initiative called Operation Choke Point ended completely in 2016 when Obama left office. And so President Trump came in, he appointed a new attorney general and new agency directors and so forth. So there is no more Operation Choke Point after Obama leaves office because we have a new administration. There were lawsuits, though, filed mostly by payday loan companies objecting to what they saw as abuses from Operation Choke Point, and the litigation continued until 2019. All the cases now have been concluded, settled, or dismissed. So as far as I can tell, there's no ongoing litigation surrounding the original, like, real-life Operation Choke Point. Nevertheless, Operation Choke Point continues to live on in the lore of the gun industry and its supporters who see any setback or inconvenience as persecution and themselves as innocent victims. And so if a bank sees the gun industry as a financial risk or a liability, this is misinterpreted as some kind of reprise of Operation Choke Point. In some ways, we shouldn't even be talking about Operation Choke Point anymore. This is years and years ago, and it was a handful of people in the Department of Justice who were basically trying to follow the money or defund criminal organizations and do it through the banks. But it has become part of the rhetoric of the gun rights advocacy groups in our country, who will say that any attempts by financial institutions or investment groups and pension funds and so forth to try to shift their resources away from the gun industry, either because they think it's socially destructive or because they think that there's a lot of risks involved, right? It's a volatile market. Sales spike a few times a year and then drop off dramatically. So it's kind of an unstable investment. And there's growing risks of liability. Some of the biggest companies like Remington have gone into bankruptcy. So there's a lot of reasons that banks may have decided, you know what, we don't really like investing in gun companies. In the long term, the risks outweigh the potential dividends or benefits and so forth. But this is framed or called Operation Choke Point, like that's still going on and continuing in that sense. And that concludes my three-part series about Texas SB19 and Texas SB13, which I talked about more in my first two videos.